Hello everyone, I am Kariliz Perez with Stone & Fields. Thank you for joining us at the Houston Real Estate Talk. Today I am with Daniel Jara from Homestart Capital. Welcome Daniel, how are you doing?
Thank you so much for having me this morning. I appreciate that.
Thank you so much. Daniel Jara, why don't you tell me a little bit about yourself?
Sure. Personally, we're talking about here?
Yes, let's do that.
Wow, how embarrassing.
Come on.
Okay, so I am a single dad of 3 kids. I live in Houston. I am local. Proud to be. Been in Houston pretty much my whole life, depending on how far back you want to go, but I've seen Houston grow up. And I just really enjoy being a dad. I enjoy running a business here in Houston. I enjoy getting to know people like you, who are so powerful in their industry and so knowledgeable. And I love UT football.
Sweet.
And I can't live without coffee. So
I like that one. I like that one. And I share that one with you. Tell me a little bit about Homestart Capital. How did you start Homestart Capital and how long has it been around?
Homestart Capital is a local lender here in Houston, located in Bel Air, Texas. We have been around since 2006. A funny story or interesting story about the name of the company. Homestart, the reason we came up with Homestart was the idea of where should the client start off when embarking on purchasing a house. And in my opinion, of course I'm biased, I'm a lender. In my opinion, I think you should start with the lending side. People all the time have the question, the curiosity, how much is it gonna cost? Can I afford this? It's not the fun part. The fun part is your side.
Of course.
Looking at this beautiful home that we're sitting in today, looking at the kitchen, imagine yourself sleeping in the master bedroom, playing outside with the kids. But the important piece of the puzzle is how do we finance this if you need financing?
Right.
And so that's where the name Homestart Capital came from. Now the company's been around since 2006. Again, we're located in Bel Air and we're very localized. The majority of the business that we do comes from the surrounding area of Houston or the inner city. We are 100% only in Texas. And so when we work with clients, we really have an in-depth knowledge of what's happening in the local marketplace. We have business relationships with title companies and real estate agents and insurance providers that know and understand the marketplace that you're working in. And that can be of a great value to our referral partners and the client establishing financing.
I agree with that. You don't know if the lender, if it's not local, sometimes it doesn't they don't even understand how the Texas laws work and things are done locally. So
I've seen some crazy things from New York lenders that
really
doesn't happen.
Oh, yeah. Wow. That's interesting. All right. So again, thank you so much for joining us. Very interesting. And today we want to talk about 5 biggest mortgage mistakes. And because you're the expert, you're going to tell us what not to do before or during the loan process, right?
Yeah.
So let's get started. Daniel put together a list of 5 different things that could go wrong and what not to do. Let's start with the very first one. So living on vacation. I love to go on vacation, but tell me about that.
All right, so we're talking about the biggest mistakes when getting a mortgage, not a mistake in your life. Vacation's good. All right, so the 5 biggest mistakes when getting a mortgage. So going on vacation during the process or going on vacation shortly thereafter your estimated close date. Now, just remember, estimated close date. I think it says that in the sales contract, right?
Yes.
On or before the estimated of.
Before.
Okay. So what's the problem with going on vacation? The problem is that getting a mortgage can be like a part-time job. Okay, and people need to realize that. Last night I got financing for some new curtains that I'm buying for my home. I literally got it in 5 minutes. Literally.
Nice.
Okay, and it was a couple of tens of thousands of dollars that was approved.
Right.
Click, 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 done, done, done. That's what they show you on TV when it comes to a mortgage. That's not the way it works in real life. Okay, so you gotta be available to your lender, you gotta be available to your underwriter. Things are going to come up. Let's not forget we're still in coronavirus environment.
Yes.
Okay, so we may need something updated. We may need a different question that wasn't considered up front, and you have to be available. If you're going on vacation, the problem with vacation is you may be in an area where you're not available, or quite frankly, emotionally and mentally, you're not available.
Right.
You don't want to be dealing with it.
No, you're having fun.
You're having fun. So you don't want to be dealing with, what? I don't want to do that. Well, but you have to because you're on a deadline. Let me give you a quick example. I had a client go to Yosemite National Park. What's there?
Oh, no signal.
No signal. We needed an updated pay stub. They couldn't get it to us because they couldn't log in. We couldn't get it from the employer. They wouldn't give it to us. So they had to take time out of their vacation to go to a local public library or go to a hotel because they were out in the boonies, okay, to get this done. They were very thankful. They were very gracious about it. They understood, but it still interfered. And it wasn't easy to coordinate with them.
Right.
Just to let them know that we needed it. Let me give you another example about vacation based on the estimated close date. We're supposed to close, let's say the 30th. Okay, the client scheduled a Chinese vacation, and you know you don't go there for 2 days.
No way.
No. So they were going to go for a month or 2 months. I can't remember at this point, but it was going to a long time. It was a purchase. They told me this about 4 to 5 days prior to closing.
Oh my God.
Okay, if not less. So we had to close that day because they were leaving at midnight. We ended up closing at 8 o'clock. Everybody was mad. Underwriter, appraiser, title. Everybody's mad.
Everybody ends up being miserable.
Miserable.
Those
It was all crunch time. If it doesn't happen, it's going to fall apart because they're not going to come back for a month.
Oh, God.
Okay. Client was happy as a clam because they didn't know anything was going on in the background. But they closed the last signature 8 o'clock. They left at midnight. They left the closing to go finish packing so they could go to the airport.
Oh my God.
Don't do that.
No.
Don't do that because there could be a lot of things that may be outside of my control as a lender, outside of your control as a real estate agent. You know, what happens with the appraisal? What if a hurricane's coming in and they can't do the insurance and you have to redo something?
Wow. Yes.
Okay, so, you know, don't plan a vacation, even if it's a celebratory vacation. Give yourself 7 days at least from the closing date because something can come up and you need to be available. So that's a big mistake when getting a mortgage.
Planning is a big deal. And even if they're planning and they already know they're going to go out of town, they should tell you ahead of time,
Communication.
Right? Yes.
Communication.
Yes. Once you sign that contract, hey, I already have a vacation planned out for this date. You know, it's important that communication is always open and you communicate with your lender of your future plans near future.
I can't stress enough, getting a mortgage is unlike any other credit process out there. I bought a car 6 years ago. I took a binder of information. I'm a lender.
Yes.
I took a binder of information. I was ready to get qualified. You know what I had to present? My driver's license. That's what I presented. Within 30 minutes, I had the car financed. There is no other credit process like the mortgage credit process because it's highly, highly regulated.
Right.
Highly regulated. Right. Credit cards, installment loans, car loans, no big deal.
And there's so many stages in the process and so many people involved.
Yeah.
You have to coordinate and everybody has to be on the same page. So if the buyer knows, plan, communicate with your lender.
Be here.
Yes, okay. That too. All right, number 2, believing in builders financing company has your back. And this is a big one, right?
Don't get me started. All right, so believing the builder's financing company has your back. Okay, so let's talk about this. This is a really big pet peeve of my colleagues, even my competitors. I'm friends with a lot of them, what we deal with. So why is this an issue? When you're going to go look at the model home that for the builder, they're always going to entice you to work with their building financing. Now, why are they doing that? 2 reasons. 1, control. Okay, and 2, there's financial incentives for them to do that. The reality is the builder financing company, you're not their client. You may think they're your client. They're going to act like you're their client. You're not their client. The real client is the builder. That's the real client. They have to keep the builder happy, so they keep on sending them their buyers. Okay, so let's not kid ourselves. It's just the truth. It's the unspoken truth, but it's the truth. They're going to treat you very nicely. They're going to make it very easy to qualify, so they say. And then you find out the rest later on.
Right.
They didn't have to work for your business. They didn't have to convince you to do business with them. They didn't have to talk you through questions that you may have. They just say, sign here, sign here, sign here. They check your credit, check, you're good. We'll deal with you 6 months down the road.
Right.
Okay, let me give you a perfect example. Jose. Jose came to us about 3 weeks ago. He was qualified by the builder's financing company. About 3 weeks ago, the builder's financing company, because 6 months later, they said, you know what? We're not going to be able to give you that FHA loan that you needed.
What? Why?
Thank you for the question. So, why? Because he didn't have 6 months of continuity with his job. Okay, now this is something that 6 months ago, that means he just started a new job. They're not asking the question. They're not asking the question. Turns out Jose also has another problem. Jose started selling some properties in Venezuela for what? You can probably imagine, for the down payment.
Right.
Never talked about that with the builder's financing company. So the problem with the builder's financing company, again, is that you're not the real client. The real client is the builder. And because of that, they're very process oriented. They're checking off boxes. Yeah, we did that. Yeah, we did this. Yeah, we ordered the title. Yeah, we ordered the appraisal. And they got a lot of you. And so they're process oriented. They're checking off boxes. But they're not centric to the client's central understanding and circumstances. So they're not having real conversations with you. So this is the problem with the builder's financing companies, okay? Now, we were able to help him and we worked things out because we understand that type of clientele. And it left him with a very bad taste with the builder. So he ended up leaving the builder and ended up working with us.
Oh, wow.
Okay. So they did provide him with a solution, but he was very unhappy with the solution because it was so different. It was so different. And the reality is they're just breaking promises. Because again, they're checking off boxes, they're going through the process. They're not really having conversations with you because they didn't have to fight for you. They don't know you.
Right.
You know, your client number 0852.
Yes. And you know what? It happened with one of my clients. They don't dig enough, right? So just 2 weeks prior to closing, they find out the buyer has student loans that they didn't know of before. And all of a sudden they're like, oh, now you don't qualify because you have all these student loans that we didn't know of. And that affects your debt to income ratio. So we can't give you the loan. And it happens so often. And
again, the key reason is two. One, you're not the real client. The builder's the client. The builder just wants to know, should I build this house? Yes or no? Okay. Just tell me yes. Okay. Yes, you can. We'll check off boxes.
Right.
And then the other one is they didn't have to fight for you. They didn't have to market to you. They didn't have to win you over. They didn't have to ask any questions to make you feel like you actually understand them. You know, they're just kind of in the background. Right. You don't even know who they are.
Yeah.
They don't even know who you are.
You're just one more number.
You're just one more number. It's just business to them. And that's why it's important to work with local lenders.
That's definitely true. Very interesting. All right. So number 3, because we have 5, let's go to number 3, shopping based on rate. Everybody's blindsided by the rate. Is it 3%? Is it good to 2.8? Tell me about that.
All right. So by the way, we did list these in order of importance. So we're getting into even more,
very good.
more important stuff and more frequent stuff that I see as big mistakes.
Okay. I appreciate that.
So shopping only by rate. All right, look, let's just get the 800-pound gorilla out into the room. Let's talk about it.
Yeah.
Rate is important. Rate's important. Okay?
Yes.
The problem with focusing on rate is that it's not the only thing that's important. At the end of the day, the rate is the cost of money, which changes how much it's going to cost you per month.
Right.
Understood. And that there should be focus on that. There should be a good amount of focus on that. But the problem with focusing only on rate is that people are going to be honest with you about the rate that they can offer. The problem is you don't know what you don't know.
Right.
What do I mean by that? When somebody offers you a rate, if they're not transparent, they can be honest, but not transparent. Okay. They're not going to tell you, oh yeah, that's the rate, hush, hush. Comes with 2 points. Oh, and by the way, we didn't tell you that there's a $1,000 underwriting fee and a 1% origination fee.
Right.
So that affects your closing cost. They're also not going to tell you, oh yeah, that's the rate, but that's with 25% down payment.
Oof.
Oh yeah, that's the rate, but that's on a 15-year fixed mortgage, which is about 33% higher payment than a 30-year mortgage.
Right.
So they can be honest, especially in situations where you're dealing with the builder financing or you're dealing with an online lender. Same problem. They don't know you. They're not being dishonest, but they're not being transparent because they don't have to uphold that level of integrity with you. All they have to know is, we can offer that rate.
Right.
But they're not being transparent. And you don't know what to ask, especially as a first-time home buyer.
That's what I was going to say. Most people don't know what type of questions. They don't understand what is an origination fee. They don't know what's, all of these hidden fees and costs.
Yep.
and they don't know what questions to ask. So
Yep.
they just go, okay,
Yep.
I got a good rate.
Got a good rate. I got a good rate. I got a better rate than my friend. I got a better rate than my cousin. I got a better
Yeah.
rate than my sister.
Right.
Okay, and the problem is, the main reason that there's a disconnect here is because although the lender is probably being honest, okay, they're not being transparent, and you can't hold them to that. So the reason there's a disconnect is because you as a consumer, you don't operate life like that.
Mm-hmm.
If somebody asks you a question, typically, especially if you're friendly with them,
Right.
you're gonna be 100% transparent.
Right.
Hey, do you like tacos? I really don't like tacos, and the reason I don't like tacos is because they don't sit well with me, and so I can't eat that.
Is that in real life? Because I would freak out right now.
No, that's not me, by the way. No, I love tacos.
I'm just kidding. I'm just kidding.
I came up with tacos because I like tacos.
Yeah. Gotcha.
But you would be 100% honest about it. You know, in the lender world, they would answer, tacos are great.
Yes.
Yeah, like, but that's not the question I asked. But okay, yeah, tacos are great. So sorry to be so silly, but to get back on track, you know, you don't operate life that way. So you expect them to give you everything, and you expect them to educate you, and you even expect them to answer questions that you didn't ask. This is what you expect as a client-business relationship. You expect that, but that's not the way they operate with you.
Right.
They give you enough to answer your question, and then they stop.
Got it.
Again, they don't talk about discount points. They don't talk about fees. They don't talk about down payment. They don't talk about amortization, 15-year, 20-year, 30-year, not really. And then the biggest question,
Mm-hmm.
do you even qualify?
Right.
Because that's a marketing question.
Mm-hmm.
What's my rate? What can you offer me?
Right.
Well, I can offer this.
Mm-hmm.
And I'm being honest. But they're not answering the fundamental question. Can you qualify for that program or that rate or that down payment?
Right.
So that's the problem with shopping by rate.
Yes.
Mm-hmm.
Oh my gosh, it's very scary, especially again for first-time home buyers that they haven't gone through the process before. They don't know what questions to ask. So always try to find a local lender that you can see and meet face to face, that you can have phone call conversations, and they can be honest and transparent with you. Very important.
One of the questions that I ask, talking about shopping by rate with people that come to me after they've shopped, is I'll ask them, have you talked to them? Yeah, I've had several emails. No.
It's not the same.
Have you talked to them?
Yeah.
Have you met them? Were they referred to you? Why is this important? When you talk to somebody, even on the phone, I call it body language or phone language.
Yeah.
You know if they're being 100% transparent. You can feel whether they really want to help you or you're just a number.
Right.
Okay?
Right.
Email is very difficult to interface that way.
Of course. Of course.
So that's one of the things.
Agreed. Very interesting indeed. Okay, number 4, waiting to get pre-qual until after contract or committing to an overly aggressive closing without consulting your lender.
Terrible idea. We're getting into the really big ones here.
Yes.
All right. So waiting to get pre-qualified or choose your lender until after you're under contract. I mean, you're a real estate agent. How often does that happen?
Oh no, I hate it. I don't like going and showing homes until I know for a fact that they are pre-qualified and they can afford the house that we're going to be looking at. That's the first thing. And in today's market, it is so crucial, right?
You would think this is common knowledge, and as a matter of fact, it is common knowledge. But there's a lot of buyers out there that may be a second-time buyer or third-time buyer. Like, look, I got this covered.
Yeah.
I've been through the process. The problem with that is that the process changed. Remember, it's 2021. We're a year out of coronavirus pandemic.
Yes.
Things have fundamentally changed. Okay, so what used to be maybe easy for their particular circumstance may not be so easy this time. The other problem with selecting your lender or getting pre-qualified after being on the contract, you've committed yourself. You're on a timeline with a contract. And now you're forced to come up with a financing solution that you're happy with already under contract.
Right.
So you may not get what you wanted. And then the other problem is there may not be enough time.
Right.
Okay? So this is exactly equivalent to situations where I get a contract from a client. It's like, yeah, we're closing in 30 days. You should be able to do that. It's like, yeah, under most circumstances we can. Of course, I'm just saying hello today.
Right.
Okay. And then it turns out that not only are they already under contract, the contract's already 7 days old. Okay. So now we got 3 weeks. So the problem again is they've already committed themselves to the contract. We have a limited amount of time to figure out a solution, okay? It may not be ideal for them. And then we have a limited amount of time to close.
Right.
And let's not forget, and I keep on saying it, we're post-pandemic, post-pandemic, post-pandemic. We are in a high level of activity market. Yes or no?
Yes.
Okay.
100%.
Guess who's really, really busy right now?
The lenders, the title companies.
Everybody, but there's one person in particular that nobody can control. They're like the maverick, they're the cowboy in all this.
The appraiser.
The appraiser.
Oh my God.
The appraiser.
Yes.
You hit it on the head. The appraiser. The appraisals are taking right now good turnaround. 2 weeks plus. Good turnaround.
Right.
You're coming to me after the contract's already been placed, the contract's already 7 days old, and we have to close in 3 weeks. Depending on where you are, it could take up to 6 weeks.
Yes.
Okay? Depending on the type of property you're buying.
Right.
You know, if it has a live-in quarters or mother-in-law quarters, some appraisers don't like that.
Right.
They want easy peasy. So they'll pass on it.
Right.
So it's a problem doing that. And then the being overly aggressive. Well, I had to do that to win the contract. And I know that my friend closed in 3 weeks. Okay. Hey, we just closed one in 3 weeks. Just now.
Right.
Like just now.
Right.
But the circumstances allowed for it. Okay. Your circumstances may not. You may have a complex situation that I don't know about because we just said hello.
Right.
Maybe you went through a divorce, a recent one. Maybe you had a bankruptcy. Maybe you're paying child support that's not documented. We got to go through the process of documenting that.
Right.
Maybe there's some outstanding collections we got to deal with.
Or maybe you just change careers.
Maybe you just changed careers.
And you don't know that's important.
Yeah. So maybe you just sold a house in Venezuela.
Exactly.
Okay. So we haven't dealt with anything that could potentially make your file that much more complex than your buddy who just closed in 3 weeks.
Right.
Okay. So it's a really bad idea. And then guess who everybody is screaming at a week before? Me.
Of course.
Or the lender. Because we are the one getting in the way. But the problem is this problem was manifested from the very beginning because you decided to be overly aggressive in closing or you didn't select your lender until after you were under contract. And that's a big, big no-no. It's a huge no-no. So plan ahead.
Definitely. And one of the things I do also when I have listings, I encourage my sellers not to accept anything until we see the pre-approval letter. So I know for a fact that the day that they're wanting to close, it's a realistic because they already went through that pre-approval process and they already have this relationship with the lender. They know they qualify and they can close hopefully on time. Another advice, and this is something that was very recent, is the listing agent calling the lender and saying, hey, I receive a pre-qual letter here. Tell me about this buyer before my sellers accept their offer. And they can get a better feel from the lender yourself. And you can tell them, yes, they're qualified, we good, the 4 weeks is enough, et cetera, whatever the case might be. That's another good piece of advice.
Guess who you can't do that with?
With?
Most online lenders.
Exactly.
So, the online lender, going back to the builder lender, they're very process oriented.
Right.
But they're not centric to the personal needs and circumstances of a buyer.
Correct.
So they're not going to be available to receive a phone call from your listing agent.
Not at all.
So, it puts you behind the 8 ball. Right. And by the way, with these online lenders, again, being aggressive on a closing date, you're no more important than the other 1,000 files that they're working on.
Exactly.
You're just not.
Exactly.
Whereas that is not particularly the case with a local lender that you may know or was referred to you or has skin in the game in the sense of their goodwill and their reputation.
Exactly. And by the way, before we finish the 5 biggest mortgage mistakes, I have a bonus question. It's a surprise here that I just came up with, but we're going to go there.
Number 5. What's number 5?
Number 5 is changing jobs during underwriting. And we just barely talked about it. So tell me about that.
Huge.
Yes.
Huge.
Yes. Been there, done that. I've seen that happen so many times. Tell me, Daniel.
Okay. Changing jobs during underwriting. So let's get this straight. You're buying, what's the average house price here in Houston?
250, 275, somewhere around there.
So just shy of $300,000. Okay. You're buying a $300,000 home, possibly putting 5% down. So you're financing $285,000. Okay, $285,000. This is probably the biggest financial, biggest financial credit that you've ever obtained in your life.
Of course.
All right. And you're telling me that during this whole process, you decided to change jobs. Guess who's going to have the same attitude about the way I just explained it on your file? The underwriter.
Right.
The underwriter is going to want to know what's up. What's going on? Why did you change jobs? Do you have the same earning capacity at the new job? Did you get a demotion? Did you go into a different industry?
Right.
All of this affects your ability to repay. ATP. So I'm not going to get into the weeds, but Dodd-Frank that was passed in 2010, there's something called ATP, ability to repay. Okay? So they have to ensure that you can repay the mortgage. And if you change jobs, that affects that possibility.
Okay.
Now there's one key thing that is basically financial suicide if you change jobs during underwriting. You can typically deal with that, but guess what's going to do to closing? It's going to get pushed out if you change jobs. We're going to have to talk to the new employer.
Right.
We're going to have to see what the job offer says. We've got to see what the salary is.
The commitment for how long and the contract.
If there's a contract, how long is the contract for? So all of that has to then be redisclosed, and the underwriter has to have a look at it. Probably going to work out if you're in the same industry, making the same amount of money and the same type of pay. But how often does all of that coincide?
Very rarely, right?
You still work around it, but you're probably going to have to push out closing.
Right.
Okay. Now, and in some cases, by the way, and I do want to say this, maybe it's inevitable. Maybe the company shut down.
Yeah. You have no option, right?
There's no option. So there's no option. But if you say to me, and I've had them say to me, what did you want me to do? You wanted me not to take this job? This is my dream job. I've been waiting for this job. Yeah, but you've also been waiting to buy a house. So what's priority right now?
Right.
Is changing careers priority or is buying the house priority? Sometimes you can have both. Sometimes you're going to have to choose.
Right.
And if it is your dream job and you are being sought after, okay, because the job market is pretty hot. Most likely the new employer can wait.
Of course, 2 weeks, 3 weeks, if you're already under contract, right?
Why can't they wait? I mean, so you're going to tell me you're going to hire me, but you're going to put my possibility of buying a house for my family at jeopardy, and so I have to start now?
Maybe for 1 or 2 weeks more.
Yeah, for 1 or 2 weeks more. I mean, is that what you're saying to me, new employer?
Right.
Most likely, if you ever said that to a new employer, be like, you know what, you're right. You can start when you close.
Of course.
Okay, so you got to take a step back and think about it from that perspective. But here is the death knell. It's over. You go from being an employee at a business, just an employee, you're making good money, whatever the case may be, and you're like, you know what? I can make more money contracting.
Oh, self-employed.
Self-employed. So I've had a lot of clients that in the middle of underwriting, they're humming along, no problem, making what we knew, qualified, hunky-dory, and then they say, oh, by the way, last week I quit, but don't worry about it.
I can afford it.
No, not only can I afford it, I'm making more money. Like, help me understand this. Like, well, remember the job I used to do? Yeah. Well, I decided to leave because they suggested it to me. I decided to leave, and now I'm contracting with the same employer, making more money. They're paying me more. They're paying me more for the same job I used to do. I'm like, really? And this happens because the employer says, you know what? Now they're a contractor. We can let them go when we need them. No benefits, no compliance, no 401k. And so it actually may be cheaper for them, but you're making more money. Right. So economically, it makes sense. But it is a death. It's over. It's over. When you become self-employed for underwriting purposes, for 90% of the mortgages out there, you have to be self-employed 2 years. 2 years. There is possibilities of using different financing, but the financing that you were qualified for is gone. Now we're going to have to work with something else, maybe in the non-QM world, the non-qualified mortgage world. There are some other solutions. We can provide them, but forget about the closing date.
Start over.
Forget about that 2.8, 2.5% interest rate. It's over. You're making more money though. Okay. So again, that changing jobs or in underwriting, the biggest mistake I see people do, and sometimes you can't recuperate from it. You're denied.
Right.
You're denied.
Right.
And that's not only emotionally devastating, especially if you're married, for your spouse
Of course.
and the kids that you may have.
Right.
But it also can be financially devastating because you'll lose the earnest money,
Yeah.
you lose the inspections, you lose the appraisal,
Or the time.
and the time invested.
Yes, of course. Of course.
So, yeah.
I have a story about that to add. Probably 8 years ago, I had this client. He worked for an oil company. Everything was going well. And the day before closing, when the lender calls the employer to verify employment on the buyer, he finds out that he no longer works there. It's been 2 weeks since he's no longer with the company, and he didn't say anything. He didn't call the lender and inform the lender. He didn't even tell me, his agent. So that was really crazy. When I called him and I asked, he said, well, but I still can afford the house.
I can afford it.
And I'm like, yeah, but that's not the point here. So please communicate with your lender before you plan on making any work decisions or moves. So definitely a big deal.
You know, going back to that story that you just said, it's commonplace, and not necessarily, again, because clients are dishonest. I don't think he's trying to pull a fast one. I think most consumers are used to, I just told you the story. Last night I got approved for tens of thousands of dollars in 5 minutes.
Right.
We're used to a credit process that is becoming easier and easier when it comes to consumer debt.
Right.
But when it comes to mortgage debt, it's not. Don't buy into the hype that you see on commercials where they pull out a phone and they do this and they're all smiling and then immediately within the same commercial, the real estate's handing them the keys.
Right.
It's not like that. And I don't know when it's going to be like that, but it's not like that right now and not in the foreseeable future.
Correct.
Because it's highly regulated. So, you know, he probably was like, what's the big deal? What's the big deal? I'm going to get another job and I have a lot of money in the bank. Just
It'll
give me
be
the loan.
fine.
It'll be fine.
Well, it's not going to be fine, and it's not going to be that easy. However, I have one last question that is not on our
Bonus?
list. Yes,
Bonus.
very
All right.
good.
Okay.
All right, tell me, for most of our viewers, for those that don't understand, or first-time home buyers, and even with people that already have purchased and sold homes a couple of times already, but tell me about the difference between a mortgage broker like you and a regular lender like BBVA or Bank of America, Wells Fargo. What's the difference when, as a buyer, you go to either one of them? Because they come to me and they say, what do you think? Should I go with Chase, with my lender, or should I go? And I'm like, well, let's talk about it. So tell me and tell everybody who's watching today, what's the biggest difference and why pick one versus the other?
Good one. I struggled with that one because that is one of the mistakes that I identified.
Okay.
But I thought these were maybe a little bit more important once you decide to go with the independent financing route.
Okay.
But a lot of people, and so this is a big mistake I think too, a lot of people put way too much credence in working with their bank. Because they'll say, and you've heard this, of course they're going to give me the loan for two reasons. Of course they're going to give me the loan if I work with BBVA or Chase or Bank of America or Wells Fargo or Capital One, because I've had my money with them for 20, 30, 40 years.
Right.
They know me. Number
My
one.
money is
My
with
money
them.
is there.
Right.
They know me. And the other reason is they have more money than God. Who has more money than Chase?
Right.
I think, quite frankly, I think Chase is the biggest banking operation in the world.
yes.
I think. I'm not sure, but they're very, very big. They're in the trillions.
Yeah.
Okay, so the reality is both things are true. They do know you as a banking customer, and they do have a lot of money.
Right.
But what they don't have is they don't have a connection with you as an individual.
Right.
Okay? And they don't know you the way you think they know you. They don't know anything about how much money you make. And even if they did, they don't know how to prove it.
Right.
Or they can't prove it. Not at that moment. Okay? They don't know what other assets you have at other banking institutions. They don't know if you've changed jobs in the last year. Okay? They don't know if you're selling assets abroad or in different states. They don't know if you own multiple homes because they're not financed by them. Okay, so they're going to have to figure it out just like I have to figure it out. And so the biggest difference between working with a bank and working with I'll call them independents, okay? Independent lenders, which is what I am.
Right.
I'm an independent lender. We, as independent lenders, work for you to ensure that things work out for you because you're coming to us more often than not through Kariliz or through another trusted referral partner. And I'm a trusted referral partner or a trusted partner in the process of financing you. So what do I have at stake that the banks don't have at stake? Okay, this is true about online lenders. This is true about builder financing companies. What do they not have at stake that I have at stake?
Right.
It is very simple. My word.
Right.
It's my word. And that to me is worth gold.
Right.
Because that's the one differentiating factor that I have. If I tell you it's going to work, it's going to work. But I didn't just say it's going to work. I'm going to be very thorough in knowing, where do you have your assets?
Right.
What have you done with your assets lately? What has been your history with your jobs? Where are you going in the next 3 weeks? Are you changing jobs?
Exactly.
Okay.
Right.
Did you recently get divorced? Do you have child support? You know, these are all questions that they're not asking.
Right.
Okay. Because they don't have to, in a sense, because if it worked, great. If it doesn't work, they'll just say, well, you didn't fit the guidelines.
Right.
You didn't fit the guidelines. And then your answer would be, well, but you didn't ask the questions. Like, yeah, well, if they're honest, yeah, you know, we really don't have time for that. We have 1,000 other clients that are trying to get a mortgage, and, you know, yours just didn't work out. Don't worry about it. Pat on the back, come back, we'll try again later.
Sure.
That's not true about me.
Right.
Or about independent lenders. Independent lenders do one thing and one thing only. One thing is finance homes. We don't do checking, we don't do savings, we don't do code plans, we don't do 529s, we don't do 401ks, we don't do IRAs, we don't do anything, credit cards, we don't do anything other than lending. And so we say if it's going to work or not going to work, we have everything writing on it working. Number one, because of our word. Number two, that's how we make a living.
Right.
Whereas that's not true about the banks. Okay, and if it doesn't work out for you, you know, again, you know, just, well, you know, it didn't work out, and, you know, come back later, and plus we got 999 behind you, and we'll be fine.
Right.
Okay, so the last thing I'll say about that is, because of everything I'm just saying, they're also not learned individuals.
Right.
They're not career lenders. They do everything.
Right.
Okay, so the lender that you'll work with there, because they don't know you, everything I'm telling you is true, but also they don't know guidelines the way we do. They just don't. They're not students of the game. They're students of the process within the bank, but they're not students of how can it actually be put together to make it work. And so those are the big differentiating factors.
Makes a lot of sense, and I appreciate that you answered that question so thoroughly. Attention to detail, personable service, that's key, and that is so important when you're making your biggest investment in your life, right? Again, thank you so much, Daniel. I had a lot of fun having you here today. And what's your phone number if somebody else has a question and wants to get a hold of you?
Okay, great. Office number is 713-275-2785. 713-275-2785.
Very good. Thank you very much. And Homestart Capital, again, here in Houston, in the Bel Air area, but also servicing
all of Texas.
All of Texas. Yeah. That's wonderful news. Thank you so much again. And thank you everybody who's been watching the Houston Real Estate Talk with myself, Kariliz Perez. And please don't forget to watch our YouTube channel and also follow us on social media, Stone & Fields. Thank you very much.
Thank you.
Bye.